What's up, everyone, and welcome to the Daily Macro Update for Thursday, February 26th. My name is Johnny Zerdy. Welcome to the live stream here. Pretty interesting reaction post NVIDIA earnings. We're going to go and get into that here on this stream, as well as take a look at some of the other developments that are happening. Lots of opportunities today. Not sure if you guys, saw those. We can cover a couple of them. But today was definitely not a day to do nothing. So hopefully you guys were, happy with some of the different opportunities that came up. We're going to go ahead and talk a little bit about some of the macro data that came out today. Not too much, though, as it's been a little bit of a light week. But we're going to be covering some of that as well. But yeah, if you're new to the channel, welcome. This is Macro Optics, where we cover the financial markets from the context of the math of the rate of change of macroeconomics, as well as we apply our macro investing strategy, which does two things. It helps us reinvest our earnings so that we can continue to compound the portfolio, but also as well, it helps with reducing downside risk. So if that sounds like something that you would like to be a part of, instead of just the hype around some of these YouTubers who make crazy thumbnails and talk about how something's just going to go to the moon and that you should dump your entire life savings into it, and then it ends up not happening. If you're tired of that, well, welcome to the channel here. But yeah, we're going to go ahead and get into it. Before that, though, go ahead and if you want to incorporate more macroeconomics into your investing process and you don't yet have a community for that, then I would recommend taking a look at our website here. We have a couple of services. If you go ahead and take a look at some of our core services here, we have the Daily Macro Vision, which is where, if you want to just remove the emotion out of your trading and just get the answers, we provide you with a list of trend and trading ranges for our top 14 index ETFs, as well as the top 10 stocks. And you can get a free 7-day trial of that just to see if it's something that you would like. But yeah, we send that to you every single morning before the market opens so that you can stop second guessing what our model is saying and kind of just understand where the trends are actually going so that you can own the bullish trends and not own the bearish trends. But if you want more than just the report and you actually want to join a community of investors with myself and my team, and you want us to help walk you through our process so that you can be proactive and utilize macro yourself, then I would suggest our 6-week Macro Mastery Challenge. This is where you're actually inside of our community, where we help walk you through and train you on our process so that you can actually, be proactive, like I said, right? So instead of just giving you the morning ranges, we give you a user license to our trading range indicator so that you can map out any chart that you want at any time, right? It's on demand. And then also, too, you're trading and investing alongside of our team, right? So it's more of a group team interactive type of thing. Enrollment is limited, so make sure you apply if you guys would like to learn more about that. But that's all we will shill in terms of what we do for people. All right. Never going to hear me shill a stock or crypto on here. That's not how we are motivated here. But anyways, interesting seeing, stocks swing a little bit lower today. Some on higher volume, some on lower volume. But a lot of people are anticipating the NVIDIA earnings that happened today. When we take a look at revenue growth, that was up 73% year over year, which I think the Wall Street was expecting like 68%. So it was technically an earnings beat. But what's interesting is that when you compare it to Q4 of the previous year, that was up 78% year over year. And then the year before that, that was up 265% year over year. So if you're comparing, Q4 on the years, right? Some people call this 2-year stacked growth. It went from 265 to plus 78 to plus 76, right? So that is, or plus 73 rather. So looking at it that way for Q4, it was a deceleration, right? And a lot of people were hoping that this NVIDIA earnings report was going to wipe away all of the AI fears that are coming about. I'm sure you've been on Twitter and have seen just a slew of different emerging AI platforms saying that they can do a bunch of crazy things, and maybe so, but there's a lot of fear right now with a large disruption with what AI capabilities are able to do right now. So we'll see what happens there. The fear is completely emotional, though. I mean, in taking a look at some of the leading indicators that we look at, such as credit spreads, bond volatility, all that stuff continues to be low. So there's really no type of underlying, market risk that we are seeing currently, which is why we think, my team and I think that we should continue just this upswing that we've been doing over the past 3 years, but it's just right now it's in a little bit of a lull. While it's in this type of period where it's more of a stagflationary environment, we're still going to own things that perform well, such as utilities, gold, things like that, while we wait for some of the more speculative types of assets like stocks and Bitcoin to come back. Doesn't mean that we have to bag hold these things on their way down. We can own things like gold, utilities. We also have industrials, materials, as well as consumer staples that are all in very strong bullish trends right now. So, yeah, not really too much of a change though from what we've been seeing over the past few weeks. But taking a look at some of the macro data here today, 30-year fixed mortgages fall below 6% for the first time since September of 2022. That's a pretty big milestone there. And then also, too, taking a look at the Kansas Fed manufacturing index, that actually continued a little bit higher here in the month of February. So that's pretty interesting. We've been getting a lot of slowing growth data. So, I mean, this isn't something that is a super huge leading indicator. You have to have multiple months as well as other types of manufacturing and services, type of indicators also saying that growth is accelerating, which we're not seeing, as well as the yield curve is not signaling that. So we're continuing in this stagflationary environment, right? And all that to say is that when you take a look at the yield curve, you can see that we're right now in this bull flattening type of trend, right? This is where whenever the yield curve flattens, that just means the yield curve chart is going down. And this particular bull flatten is what's called a bull flattening twist, right? Or it's going in between a regular bull flattening versus a bull flattening twist. And what I mean by that is this is a certain type of yield curve phase, right? And we get these signals, every so often, over the next, pretty much 3 times or 4 times a year, you get these types of inflections. But this is where the 10-year, so the long end of the yield curve, is falling more than the short end of the yield curve, which just translates to growth is slowing while inflation is remaining sticky. This is typically a gridlock period in terms of fiscal policy, right? We're coming up on midterms. Maybe the market is starting to price in more of a Democrat, swing back, right? And so, if that happens, the current administration does lose their dominance in terms of, their fiscal policy ambitions, right? and that could prevent new spending, which, as we know, government spending has been one of the main things that has been propping up the market over the past 3 years, with them just basically printing short duration bills in order to fund the government because they don't want to issue long duration bonds at these higher interest rates. So if that continues to happen, that's a dry up of liquidity, which, there's a reason why Bitcoin is actually performing bad right now. So it's all of this is being front ran in a lot of the different pricing that we're seeing, right? And Fed policy is typically at first a hawkish pause, which is exactly what we're seeing, right? Rates higher for longer. They're pausing into a stagflationary environment. Typically, the dollar does well in that environment. But we're not seeing really a global slowdown, as a lot of emerging markets are also accelerating, right? So, but gold, energy, staples, healthcare, all of these are in bullish trends. This is right in line with what we typically see when we have a bull flattening of the yield curve. What typically does poorly is discretionary financials and industrials. Industrials is actually performing well, so um, that's out of this template, right? These templates aren't perfect. It's just to give you a little bit of a background of what's happening and what the bond market is trying to price in. But consumer discretionary and financials are definitely in a bearish trend. So this thing is nailing it right on the head. And that is really what the bond market is signaling here. That's why we pay attention to the yield curve and why the yield curve is such an important part of my team's process. And so that's really what it's all signaling here. Yeah, what else do we got for you? Still, the target rate probabilities for the March Fed meeting, 96% chance that they're not going to cut rates and they're going to remain paused in between this 350 to 375 basis point range. We've also had comments over the past few days from Fed board members saying that, yeah, we're probably not going to cut for a while unless we see a dramatic decline in inflation, which may not be reported in the real numbers for a couple more months. So again, the Fed continues to be backward looking with just paying attention to these government data releases, which are incredibly laggy, right? They're almost 2 months behind of what actually is going on with inflation or growth or whatever. A lot of the leading inflation indicators that we're seeing is that we're actually seeing inflation continuing to drop here. We had a little bit of a spike in January, but now we're seeing it continue to come down. And so my team and I do believe that inflation will continue to disinflate. But if you have growth slowing down on top of that, that's typically not a great environment for stocks anyway, right? So maybe that's what Bitcoin is front running. Who knows, right? Time will tell. But we continue to just see, no matter what, whether it's flipping between, deflation, disinflation, slowing growth, or stagflationary environment, what typically does well is a lot of hard assets, a lot of, things like commodities, a lot of these cyclicals that tend to do well. So we're not seeing any type of change in that, right, for the time being. And so that's why we want to continue to just be long a lot of these things that are continuing to have a lot of strength, such as energy, which had a little bit of a bounce here today, consumer staples, real estate, industrials, materials, healthcare. Healthcare, not as much. The best one, though, being utilities, right? Utilities over the past couple weeks has been having a huge breakout. And the team was pretty much ahead of this, which was great. Love seeing this in the portfolio. But yeah, these are the things that you want to own currently in this type of environment. So hopefully you guys do. If you guys don't worry. There's going to be plenty of other opportunities here. And yeah, we were just seeing dips in something like XLU today, which did provide a little bit of a buying opportunity at some point. But there's that. Materials as well. Gold was making a pretty decent move today, wicked all the way down to the low of the trading range in our trading range model, which again, this range that I have here, this isn't some type of Ichimoku cloud, single factor type of indicator here. This is our proprietary trading range model. And interestingly, gold, let's go ahead. Let's mark this right here. The low of the trading range was right around this 4. Yeah, right there. And then let's go on the smaller time frame here. Take a look at that. It just whipped down right to the low end there. All right, that's actually, let me see. Where did it wick down? Maybe that's an error here on TradingView. But yeah, interesting how the loan of the trading range was able to capture that. But yeah, gold continues to do well. Silver, not as much. Silver miners have been doing well, which are near the top end of the trading range. Hopefully, you guys weren't chasing that though. Um, but yeah, a lot of these different miners. Wheat continues to have a breakout. WEAT is the ticker for that. Dry bulk shipping, BDRY, continues to have its bullish trend. There was a buying opportunity yesterday at the low end of the trading range. Bitcoin continues to be crap. Mega caps and Qs continue to be in bearish trend. Despite the sell-off today in NVDA, it's not bearish just yet. I'd probably put this as neutral. Need to converse with the team there to see exactly what they think. It was on accelerating volume, so I'm pretty sure this is either going neutral or bearish. Apple went back to bullish trend. Starting to see a little bit of strength there on some of those mega caps, but S&P 500, as you can see from the green lights behind me, is in bullish trend. So it keeps flip-flopping between bullish and neutral. There's a lot of other things that are better to buy than the SPY. So it's not like I'm too hung up on that, but it is interesting seeing the S&P 500 flip. It's trying to decide what to do from here. But yeah, really just continuing to see the trends that we're seeing, the ones that we mentioned earlier with the specific sectors. But yeah, I like seeing gold volatility continue to come down here. So continuing to buy dips in that. The volatility index of the S&P is continuing to drop, even though it did have a spike here this morning. Pretty crazy trading day. But in terms of credit risks, we're just not seeing any type of credit risks, right? Forward-looking inflation indicators, 5-year break-evens continue to go down. What else here? Tips continue to come down. Those are all things that are showing that this quick little, stagflationary spike probably won't last too long. I wouldn't be surprised if we start to get inflation lower signals at some point in between like the middle of March and the beginning of April. So maybe we only have a couple more weeks of this type of, inflation accelerating fear. And, before we go back to, inflation coming back down, soft landing narrative, all that stuff, which would probably be a good time to start to rotate into some of those things that do well when the market is anticipating the soft landing. So that's what I'm seeing here today. Market closed about 5 minutes ago. As you can see, a lot of the major players having a down day. SanDisk continues to just rip, right, in terms of tech goes. And also, too, we had a little bit of a bounce in a lot of different quantum computing, AI narrative stocks, right? I think one of the ones, let me see. I just saw it a second ago. Oh, yeah, IonQ, right? So this thing is one of those quantum computing / AI narrative stocks that had a little bit of a pop today. So if you guys own some of this was a great selling opportunity. Definitely not a time to chase that. What else? Rigetti, RGTI. This was another one of those. Another one of those quantum computing favorites that is just, had a class. I mean, it almost looks like, what is this? Like ARK Invest type of thing, the Kathy Woods ETF or whatever. So yeah, this thing has just been completely selling off after it ripped in early Q4 of, or the end of Q3 of last year, beginning of Q4. So, yeah, a little bit of a selling opportunity at the top of the trading range. A lot of the junk that's been going down a lot has just been bouncing, and that's really just been what we've been seeing in the markets. You don't want to you don't want to be getting caught up in a lot of these different bear market bounces and trying to chase them, especially at the top end of the trading range, because then you pile in and then it goes back down to make a lower low. And now you're just, in a really bad spot. So hopefully you guys were not doing that. And hopefully you were fading your emotions instead of succumbing to them. But with that, we'll go ahead and get into some questions here and then we can wrap it up. So hopefully everyone is having a fantastic what is today? Thursday, wherever you are. My dad was just here. He was visiting a little bit, and him and I were talking about some pretty good ideas here. And last night we had our proprietary private meeting with our 6-week challenge members as well as our partnership circle members, which is called Macro Madness. And it was a pretty good call. Lots of great call outs in there as well as some coaching moments. But one of the things that my dad and I were talking about was a lot of these different types of defense stocks, right? So if you take a look at an ETF like ITA, you can see that this is something that's in bullish trend, right? And a lot of the conflict that's going on in the Middle East, sometimes, or not sometimes, a lot of the time, you see a lot of inflows to some of these more defense related stocks. And so there's a few of them within this that were on our list. And then also, too, energy was providing a little bit of a buying opportunity today with some of the select stocks within the energy sector. So hopefully that was on your radar because it ended up higher today. So a lot of interesting intraday moves and a lot of different opportunities there. If you guys are, wondering about things like Tesla, Rivian, I don't know, Palantir, AMD, all of those things remain in bullish trend and are nowhere near, buying opportunities in our model there. So like Palantir, AMD, Rivian, some of those other ones, call these like the Twitter stocks. Yeah, those are all remaining off limits for the time being. At some point, they'll get back to bullish trend, but not right now. Raphael asks, is Costco and Dow a good buy? Interesting call outs there. Appreciate that, Raphael. Something like Costco, I don't like how it formed a lower high right here. And then, also too, this bounce here was on lower volume. You got earnings risks next. You have earnings risk next week on March 5th. So, yeah, even though it's in a technical bullish trend, it's not something that's on the top of my list here, So, that's what I see about Costco. DOW, kind of similar. This is starting to break trend. It's a little bit more of a wild stock, right? It's obviously not as big, $20 billion market cap compared to Costco, which is 430, almost 438 billion, right? So nearly 10x. But you're going to have some wilder swings in something like DOW. Anyway, though, it is bullish trend. It's something where I do like how this is approaching the low end of the trading range on decelerating volume, right? You do want to see that, but take a look at historical volatility. The 30-day is above the 90-day, so volatility is accelerating. That's not typically what I like to see, right? What we want to see is continued trend strength with volatility decelerating and then also volume decelerating as it approaches the low end of the trading range. So as much as it is in a bullish trend, again, it's not like the bullish trend that you want to be buying right now, right? And that's what you have to be able to do pretty quickly when analyzing these things on the charts is, okay, two things can be in a bullish trend, but which one is a better opportunity to buy, right? Which one is going to give you the highest probability of it continuing higher? And these are the types of things that we analyze and we look at on a daily basis in our macro investing community. That's Remy in the background. Hey, Remy, chill, dude. I'm right over here. Come here. For some reason, after he eats, he like whines. I don't know why he does that. Remy, I'm in here, buddy. Maybe he'll come up and visit. I should just have like a thing of treats on my desk here. I don't know if you guys can hear him or not. Yeah, Remy. All right. What else? Weeble has the same error on that one. Okay. Well, for gold for GLD. Gotcha. He sounds like someone whining. I don't know if the neighbors are gonna like be concerned. Remy, dude, chill. There's something wrong with that cat. I think someone says, I think Remy is bearish on Bitcoin. Well, Bitcoin is bearish. And it had a pretty interesting pop the other day, but I mean, it went right to the top end of the trading range and it provided a little bit of an out before continuing lower. But, you know, it's staying in a firm bearish trend. I mean, Bitcoin is also one of those things that I wouldn't touch with a 10-foot pole right now, right? There's so many better bullish trends to own that there's no reason to try and, you know, be a hero and call the bottom in Bitcoin. That was something that I kind of had to learn the hard way as well when developing this process. Because you do, especially with someone like me who like makes content like this, you know, you want to be making calls and stuff like that. But I realize that that's a losing battle and it doesn't help anyone. And even if it does work out in my favor, it's just an ego boost, and that doesn't help anyone either, you know. And so checking that at the door every single day has been a daily practice for me, especially recently. But it's an important practice, especially with trading. All right. What else do we got here? Let's take a look at some of the performers this week here. What have been the best ones so far this week? Silver Junior Miners, SILJ. Take a look at this thing, right? Near the top end of the trading range on lower volume, though. So this is a pretty good selling opportunity on this. Definitely not chasing this one. Silver Junior Miners, silver regular miners, gold Junior Miners, GDXJ. Here we go. As well as copper miners as well, COPX. Take a look at all these, right? The one that I like the most actually is copper miners because that's on accelerating volume. Everything else has been accelerating, has been going up in price on decelerating volume, right? Some of the worst ETFs this week. China. Take a look at KWEB. Yeah, this thing just continues. A lot of people are like so scared about China, but they're in a full-blown recession right now. And they have a huge problem with their demographics, right? I mean, I don't think they're ever going to recover from that one-child policy thing that they did. I mean, just you can't grow if you have a declining population, right? I don't care how technologically advanced you are. And that's part of the problem that the United States is going through right now is since we have the population supplement known as immigration cut off, and the native population is just left exposed, and we can see it for what it truly is, which is the native population growth in the United States is negative, you know. And you can have technological advancements make up for that, but you know, if you continue to have population decline, then it's just you're on the clock, really. You know, it's unsustainable. But that's going a little bit off tangent. let's get back to what we're looking at here. I think the biggest opportunity so far this week has been energy. Some of the major components of this is something like ExxonMobil, which over the past, since the beginning of the year has just been on a ripper. And pretty much since the middle of February here, it's been having a little bit of a consolidation period on lower volume. So that's really good. So I've been continuously adding to XOM and waiting to see the next move from it. So that's what I'm seeing right there. Let me see what else is going on here. Yeah, natural gas. Also this week, ITB, housing construction, pretty wild price action. But it does continue to be in bullish trend, even though the price action is pretty volatile there. And then, yeah, that's pretty much what I'm seeing here so far in the markets today. Now, my team and I, we have an entire list of ETFs and stocks that we like, which we produce for our members every single day. We have it on a list, things to own for the medium term, and possibly the long term if it ends up continuing in, those bullish trends. But if you want access to that, you got to, go to our website and take on the challenge. Book a time with me. We'll go over all the details. And that call is free, by the way. You can just go to apply now and we can go through, watch this little video that I made here just to give you a little bit of a briefing on it. And then you can hit the apply button and book a time for a strategy session where, you and I will go through more of the details there to see if it's a fit. But with that, that's pretty much all I have for you guys here today. I know in terms of my like short videos that I make for like Instagram and TikTok have been lagging a little bit, but those will be ramping up here soon. Again, I'm planning out more of like my content strategy so that I can continue to deliver some high quality, short video updates for you guys, as well as give some tips, some really good questions that my community members have been asking us in some of these private calls, as well as just an overall more activity level for myself, right? Been a little bit under the weather over the past like 10 days or so, moving into the new place, all that stuff. So I'm going to be getting back on the horse here soon with the short content. So stay tuned. Don't worry. That's not, that'll be coming back here soon, but I appreciate everyone for joining. As always, good luck out there. Send me a DM if you have any questions, and we will catch you on Sunday macro wrap up, because we don't have the daily macro update on Fridays, which is pretty interesting, as sometimes on Fridays there's a lot of crazy stuff that happens and I'm not doing a stream. So of course that's how it goes. But actually, wait, we got a couple more questions. Do you think some big players are very slowly starting to build positions in tech and Bitcoin? I don't know. I don't see that at all. I mean, flows are negative, so that's not being suggested at all. Thoughts on TLT uptrend, and any comments on continuing the uptrend past 92, 93 days? Yeah, I mean, we continue to see rates come down. So yeah, I mean, I think that should continue. Would I be buying calls right now? Probably not. It's at the top end of the trading range, right? Wait for a little bit of a dip in order to get a little bit of a better opportunity there, like it did on February 20th, right? But yeah, I mean, bond yields are bearish, and so their corresponding bond price ETFs are in bullish trend. So yeah, good call outs there. Do you invest in European stocks or only USA? I don't directly invest in European stocks, but if I was, I'd be buying something like EWU, right? Yeah, I mean EWG. Let's see. Switzerland, Sweden. I mean, you have a lot of these other ones, right? But these are these are United States based ETFs of their countries, right? So if I was to have exposure to any type of emerging markets, that's where I would be, right? Mainly with the ETF EZU, which is in a strong bullish trend right now. But but all right, that's all I have for you guys here. I appreciate everyone for joining. Good luck out there, and we will catch you in Sunday's Sunday macro wrap up. Bye, everyone.